All right, so week 35, outlook number one. As usual, British pound futures. Let's start. So we have achieved the target as we expected, as analyzed. Finally, after weeks of waiting for this target to finally be reached, we reached it here. And what happened actually is we discussed what happens, where do we go from here? What happens once we finally reach this specific target that we have been talking about? I said, same as usual. Do we get a liquidity draw or do we get a break of structure? If we get a liquidity draw, we can anticipate that price is going to reverse direction, as in we were bullish and now we should reverse bearish, which immediately, in the very immediate price action, that is exactly what happened, right? You see we have an immediate pullback. Not only that, but we discussed in detail why this area was significant, and looking at the price action, this is kind of validating that narrative of waiting for price to reach this area. There was a ton of orders waiting to be mitigated, and you can see now that the bulls and bears are absolutely battling, as you can see by the very compressed candles and also the wicks to one side versus the other. But notice, if you look a little bit closer into this area, the governing factor here is the fact that we have a liquidity draw off of this high. That is the immediate indication that we should be looking for potential bearish order flow. That does not mean we will absolutely get it. It's just indication based off of the system. But now, supporting that order flow is following the liquidity draw. What we should be seeing is price to begin downward price action or downward movement to clear out some or to clear out these lows. And now what we want to see is, if this is going to be confirmed bearishness, is we want to see price clear not just liquidity draw, but break of structures on these liquidity points, quote unquote, structural points inside of this bullish run. So the most immediate one that we want to see is actually this low to be broken here. So I will annotate that. And fix that real quick. So we want to see this low broken. And that right there, for me, will be enough confirmation to validate the bearish transition from, or the transition from bearish price action to bullish price, or bullish price action to bearish price action. And if we get that break of that low, then secondary confirmation or more confirmation would be a break of structure of this low. But obviously, we don't want to wait for this unless we absolutely have to. We would like to see price generate some sort of inefficient pricing following the break of structure or prior to the break of structure here, and then come back and fill that. Or if you want to be ultra aggressive and very risky, you can look for opportunities that are inside of this area. But I'm pretty sure, as you can see, just looking at the wicks, most of everything is pretty balanced in this regard. So it might be real risky to try to look for entries if it's based off of an established system, unless, you just YOLO it and just press sell. And then now you have to worry about, okay, where are you going to place your stop loss? Obviously, the invalidation for this area right now would be at the high. But if you're looking for a low risk, high reward entry in the spirit of RCV, ICT, and then my own system, then you obviously would have to look for some sort of inefficient pricing to play off of. But nonetheless, what we're waiting for is confirmation that this is going to transition bearish. We're already getting a lot of battling between the bulls and bears as we've reached this target as expected. And I hope you guys are starting to see that now, why I annotate these highs and lows and why they're so significant. And then understanding the price action, looking at the candles and how they react to certain places, is indication that there is orders or influence inside of the market for that particular area, and they're being activated and mitigated and balanced and all the other words that you want to use there. So summarizing, we've reached the high. We've performed a liquidity draw not once but twice. So we performed the liquidity draw at the high itself, then we performed the liquidity draw on the liquidity draw itself, and now we've begun to very slowly descend from this high. But all this is, to me, if you're going to really tie in a narrative to it, is Like I said, we're just trying to balance out the orders. So we're balancing all the bull orders to the sell orders that were already in the immediate area. And now we want to see who wins the battle after all the orders are balanced, or what orders that exist here are balanced and what orders are imbalanced. And once that imbalance is created, you will see a dispersion, or not dispersion, you'll see a displacement either higher or lower, which will create inefficient pricing. All right. So that is what we should look for on pound futures. All right. So that's scenario number one, is looking for bearish continuation following the liquidity draw. Scenario number two is, like I said, we're just looking for continuation of bullish price action. And if we are looking for continuation of bullish price action, then, we're going to move higher. These highs to me are just, they're just highs. This one was most significant because of the way we have really relatively equal highs here. These are just like liquidity points in my eyes. If we break this, then I think we're going to go to this high here. But all right, so that's what we're seeing on pound futures. Now, NASDAQ. Okay, so we have a lot of development here. We have finally begun displacing very, very heavily from this area. And we talked about it last week that, based off of these highs, why they're significant. We said that this was a liquidity draw, and after we get a liquidity draw, we should be anticipating reversing of price action or transition of price action. In this case, it was bullish to bearish, and as you can see, this is very bearish. But also, we talked about that we were not expecting price to start moving towards the high. Why? Because we are in a range, and inside of a range, unless it is balanced, if it is the true range, unless everything is balanced, price will not leave that range. That is like the principle or the law that if you want to live by ranges and understanding inefficient price action, that is what you should live by. And so, as anticipated, through the principles, through the logic of that, we had a response from this area, and now we have moved we've moved much lower here. And so we should be anticipating if we are going to continue not only to balance the range, we should be looking for price to continue down towards equilibrium and move into the discount, and then looking for opportunities in the discount side of the market. But we've yet to do that, and we're just waiting for that to happen effectively. And then now every opportunity for a pullback into inefficient pricing is an opportunity to sell, because not only that, we're on the premium side of the market, so we should be looking for selling opportunities. All right, I hope that makes sense. That's pretty much it for that. The only opportunity that I immediately saw following this, and so I don't know if I spoke about it too much, but I did say I was looking for price to come back to fill this inefficiency, but that's not right. What I should be looking for is an inefficient pricing to be filled, and then the following inefficient pricing it should be the one that I'm looking for to be mitigated. And so right now, that's just like, there's nothing, right? Everything is pretty much either balanced, or we have not returned back to any sort of inefficient pricing. Like even all of these pullbacks, this is already balanced. Even this right here, this is already balanced. This right here is inefficient pricing. This is inefficient pricing. This as well. But these would still be outside of the definition of an area of interest, where we would need to see inefficient pricing balanced and then displacement lower from that inefficient pricing in order to use that as an area of interest. It would be very risky and really like a 50-50 probability, if you want to quantify it, for price to just pull back and take a trade off of this inefficient pricing. But you do have a little bit more security because we're on the premium side of the range, but that's a little bit that's outside the scope of this video. But as of right now, what we do have is inefficient pricing that is mitigated at least 50%. But once again, there's no inefficient pricing following it. You would have to scroll down to lower time frames or something to find it. But even then, that would be risky. So it'd be better to wait for price to show its hand a little bit more if this is going to move higher and perform another liquidity draw on some here or fill inefficient pricing, or if this is going to displace lower and generate new inefficient pricing. And so the impetus for the generation of this new inefficient pricing / area of interest would be because we have this mitigation of this inefficient pricing here. And so any immediate inefficient pricing created following that would be an opportunity to take risk. All right, so that's it for the NASDAQ. Like I said, summarizing yet again, because I was rambling a lot, we have the liquidity draw, we have the displacement lower, we have defined the range. We should be looking for return of the range back towards equilibrium at the least, and then into the discount if this is the true range. All right, moving on to Dow Jones. We have finally pulled back into the discount side of the price leg, quote unquote, mini range. And we had a response from something inside of this area. I wouldn't even say it was an area of interest in my eyes. Like, there's literally nothing. This is just a pullback into the discount. Just like I said, leave it up to the raw price action. And now we are pulling back, or we're, performing the continuation into the premium side of this price leg. And so now we need to see, hey, is this actually going to continue higher, or is it going to pull some sort of move and start moving back deeper into this price leg? And furthermore, is this going to be a failed bullish price leg, and are we going to transition into bearish price action? And if we break this low, then once again, we will transition from a bullish run into a bullish range, but that is yet to be seen. There's nothing in the immediate for price to come back to in order to mitigate. Everything is pretty much well balanced. So any opportunity, especially if you're looking for sells, for counter trend, it's very risky. I mean, I would wait for probably structural actions. I mean, this wick is something, but that's outside the scope of this video. But the structural actions at these highs would be something indicating that we could be looking for opportunities. But as of right now, it's a little risky to try to look for sells, especially in this area. It would be better off looking for buying opportunities, but because we have displaced from the discount side, that is a little risky as well. So wait for more price action to develop in order to frame up your trades. All right, that is it for week 35, outlook number 1. Peace.